Welcome to Dubai Daily, your essential morning briefing on Dubai's real estate market. This is episode 16, and today we're exploring the powerful potential of mid-market investment opportunities.
This episode is brought to you by Parag Kundalwal, founder and CEO of Consulta, a Dubai-based real estate consulting and global capital advisory firm. We've got a lot of ground to cover, from high-yield locations to smart investment strategies.
Let's dive right in. When we talk about the mid-market, we're generally looking at properties under 1.5 million dirhams. Lily, how does this segment stack up against the high-profile luxury market?
It's a fascinating comparison, Daniel, and it really comes down to an investor's goals. For pure cash flow, the mid-market is king. We're seeing average rental yields of 7 to 9%.
And in top-performing areas like JVC, Arjan and International City, those yields can even push up to 8 or even 12%. Luxury properties, by contrast, typically offer 4 to 6%. It's a significant difference.
Exactly. Now, on the flip side, luxury properties can offer higher capital appreciation during boom cycles, but they're also more exposed to market slowdowns. Mid-market appreciation is slower but steadier, projected at 8 to 12% by 2026, often tied directly to infrastructure and population growth.
And what about getting in and out of an investment? Liquidity is key.
The mid-market wins here too. The buyer pool is much larger due to lower entry costs. You can find studios from 180,000 dirhams and one-bedrooms from 550,000. This makes selling much easier than finding a buyer for a multi-million dirham penthouse.
So the strategic approach isn't necessarily choosing one over the other. It's about balance. A smart portfolio might combine 60-70% in mid-market properties for that consistent cash flow, with 30-40% in luxury for that higher appreciation potential.
Let's zoom in on a specific high-yield opportunity. Arjan has become a real hotspot for savvy investors. What are the numbers looking like there as we head into November 2025?
The numbers are strong. Price per square foot is between 1,200 and 1,463 dirhams. Rental yields are hitting that sweet spot of 6.8 to 9%. We're seeing exciting projects like Vincitore Dolce Vita completing in Q3 2025 and Samana Skyros with its private balcony pools completing in Q4.
Those are attractive prospects. But investors should be aware of the potential risks, right? There's a lot of development happening.
That's the key consideration. With 45 new buildings expected by 2026, there is a potential oversupply risk. The ongoing construction can also impact immediate livability. It's about balancing immense potential with on-the-ground reality.
Moving on, what about areas offering a more balanced growth profile? Meydan comes to mind.
Meydan is a great example of a mid to premium market. It's perfectly located near downtown and Business Bay. A one-bedroom apartment averages around 1.25 million dirhams, and the average ROI is a very respectable 7%.
And let's not forget Motor City. It's a more established community, but it's punching well above its weight, with an ROI above 8.7%, one of the highest in the mid-tier segment.
It has strong demand from families and professionals, thanks to its mature amenities and great connectivity. And there are other gems too. International City offers yields of 8 to 9.5%, with studios starting at just 180,000 dirhams.
Jumeirah Village Circle, or JVC, remains a powerhouse, with yields up to 12% on smaller units. And for future growth, all eyes are on Dubai South, with its connection to the Al Maktoum Airport expansion. Projections show potential growth of over 44% by 2026.
One of the biggest drivers of accessibility in this market are the payment plans. They've become incredibly creative.
They really have. Beyond the standard 60-40 or 80-20 construction-linked plans, we're seeing post-handover plans that let you generate rental income while you're still paying off the property. And then there's the 1% monthly plan, pioneered by developers like Azizi and Danube.
That one is a true game changer for first-time investors. A small down payment, then 1% a month for 6 to 8 years. It makes entering the market incredibly manageable.
So let's bring this all together. What's the market outlook and what should investors be thinking about right now?
The outlook is nuanced.
We might see a potential 5 to 10% price correction in the mid-market in late 2025 or early 2026, mainly due to the new supply coming online. But this isn't a crash. It's a strategic buying opportunity.
Because the underlying demand remains incredibly strong. Dubai's population is projected to exceed 4 million by 2026, and favorable tax policies continue to attract a global audience. So for investors, it's about timing and strategy.
Right. If you're a cash flow investor, focus on Arjan, JVC, and International City for those 7 to 12% yields. For capital appreciation, look at areas with major infrastructure development like Dubai South or Creek Harbour and consider a balanced portfolio.
And the key takeaway for our listeners today:
Mid-market properties under 1.5 million dirhams offer superior rental yields of 7 to 9% on average, with some areas hitting 12%. A strategic portfolio mixes 60 to 70% mid-market for cash flow with 30 to 40% luxury for appreciation. The potential market correction in late 2025 creates a prime buying window. Focus on infrastructure-linked areas and leverage flexible payment plans to maximize your entry point.
Excellent summary, Daniel. That's all the time we have for today. Dubai Daily is here for you, Monday to Friday. For expert advice on navigating the Dubai real estate market, you can contact Parag Kundalwal.
You can find him by searching for Parag Kundalwal on LinkedIn, on the web at consultadxb.com, or by email at parag@consultadxb.com. His phone number is +971 58 596 461.